Hello and welcome to ByteTree's Global Trends Investing webinar. If anyone doesn't know us, we offer high-quality investment advice and products across asset classes to help investors have better outcomes using sound financial principles. I'm Kit Winder, and I joined a few months ago as the senior analyst here, and I'm very excited to be hosting this webinar today. I'm joined by Charlie Morris, founder and CIO of ByteTree, and Rashpal Sohan, FRM, who is the Senior Macro and Quantitative Strategist at the ECU Group and editor of the Adaptive Asset Allocation Report. Together, they have 25 years of experience in momentum investing and technical analysis. Now, many of you will know ByteTree for different reasons. Perhaps it's Charlie's multi-asset strategy, the multi-asset investor, or his value stock picking service, ByteTree Venture, or perhaps through Rashpal and Robin's Adaptive Asset Allocation Report, or maybe from our crypto research. Well, Global Trends is the latest addition to our suite of research services, and it's going to take two forms. Firstly, we put out a free newsletter every Monday called GTI Top 200, which shares around 20 interesting stock trends from the world's largest 200 companies. That means over about $80 billion market cap. And this is going to come with brief commentary at the top. Rashpal does the data, Charlie the commentary, and then I cover the stocks with a little bit of commentary on each one of those. Before that, though, every Monday or the first day of every week, if there's a bank holiday, we publish GTI Premium, which comes in the form of a spreadsheet containing all of the most important trend data on the world's 2,500 largest stocks. This covers all sectors and geography, so there's everything you need. And why are we doing this? Firstly, because momentum investing works. It's a brilliant enhancement to fundamental strategies. And secondly, because after a long period when there has been one main singular trend, which is invest in America and invest in big companies, global trends investing is going to help identify the new trends that emerge as US exceptionalism fizzles out or comes to an end. We've seen in the first quarter of 2025 that it doesn't take much capital flowing out of America to really boost the ignored and undervalued corners of the global stock market. I say corners, but that's markets like Europe and Japan. And there's a lot of places it could go. So global trends investing is designed to simply and quickly pick up the new trends as they emerge from the end of US exceptionalism. So that's the backdrop. And now we're going to run through the two key components of global trends investing, which are CAPR and ByteTrend Scoring, before breaking out the four trend categories in the service and showing you how GTI Premium is set up. But before we go on, I'd just like to say very clearly that this is not financial advice. So having said that, Charlie, over to you.
Thank you, Kit. Definitely not financial advice here. So what we're going to do here is show you the currency adjusted price relative chart. Yeah. So I've deliberately taken a non-US stock, a Japanese stock in this case, could have been anything, Mitsubishi UFJ, and this is the same stock that we use in our user guide. And there are two prices there. One's the share price of Mitsubishi UFJ in US dollars, and that's in red, and then in yen, it's in black. Now, because the yen's been weak over the last few years, the price is higher in yen terms than it is in dollar terms. But of course, an investor in UFJ has had the same return in both charts, because if you swap one currency for the other, you end up back where you started. So what we're trying to do here is compare all stocks around the world, regardless of currency, and compare them to the world index. And so that's why we have currency adjusted price relative, or CAPR. So now we've got the Mitsubishi UFJ dollar chart. So we've converted it into dollars, and we're basically looking at it against the world index that's also in dollars. So this ratio of that divided by that equals this purple line on the bottom. That purple line is currencyless. It's a ratio. Yeah, so you've got dollars over dollars, and we're quite simply saying that if you had 100 here, and over at that moment there you had 100, you had the same return investing between here and there in the world index as you did in Mitsubishi UFJ. Today you're at about 90. So you're slightly worse off in UFJ than you would have been in the world index. But what's quite clear is between 2015 and 20, UFJ was underperforming the world index, and then post 21, it was outperforming the world index. And it's as simple as that. CAPR is a way of measuring how a stock is doing relative to all stocks there are in the world. Yeah, so we've taken the currency into account, we've taken the market into account, and we're asking the very simple question: is your stock doing better or worse than the world? And in the next bit, Rashpal is going to tell us how the ByteTrend score works. Rashpal.
Thank you, Charlie. So thank you for explaining the concept of CAPR. What we're trying to do is we're trying to quantify the CAPR concept in terms of evaluating the strength of a trend using a simple and transparent scoring system. And the way it works is shown in the slide in front of you, right? So we essentially assign a point if the CAPR is above the long-term moving average, which we define as a 200-week moving average. We also assign a point if it's above the short-term moving average, which is roughly half a year or 30 weeks. We also give a point if the long-term moving average itself is rising, which means it's moving in the right direction, and in both in terms of long-term and the short-term. So if the short-term is also moving average is rising, it also scores a point. And then lastly, we score a point if the price or the CAPR price basically last touched the maximum, the 20-week maximum, right? So the maximum you can score is 5, which is fantastically strong trend, and the minimum you can score is 0, which is a very weak trend. To demonstrate this, we've shown the same chart from Mitsubishi running back from 2015. Beneath, you can see the ByteTrend score shown in blue, right? You can see it oscillates between 0 and 5. If you look at the recent price action, so let me explain what the 5 variables are. The black line is CAPR. If the black line is rising, it means that stock is outperforming the world index. If it's falling, it means the opposite. The blue line is the 20-week maximum. The red line is the 20-week minimum. The green line is the 200-week moving average, and the purple line is the 30-week moving average. You will notice very recently the score is 5 because the slopes are positively sloping. So you score a point in both of those. The price is above the 200-week moving average. And you can see that very recently in this zoomed in price action for 2025. You will notice temporarily the price dipped below 5, not the price rate, the score. It went to 4 because the CAPR dipped below the 30-week moving average, the purple line, right? So it was still a strong trend, but just slightly less strong. But on the whole, it remained a strong trend right through. If we go now to the next slide, for 2020, so this is right during the throes of COVID, you will notice the trend score fell all the way to 0 when most stocks were falling, right? If you notice the black line, so that's the CAPR again, it was hugging the 20-week minimum, right through, because the action was very bearish. And you can see the score remained consistent right through till things picked up due to monetary intervention by the authorities, right? So that was about 2021. But on the whole, the scoring system tends to remain consistent. So a weak trend remains weak, and a strong trend tends to remain strong for quite a period of time.
Thank you, Rashpal. And what do we do with this? We've got the two concepts we've shown you so far: CAPR, currency adjusted price relative, a different way of looking at share prices, in my opinion, a much more useful way than looking at share price. And the second point is how to measure that trend, and that's where we bring in ByteTrend, an unbiased, simple scoring system that it also enables you to rank trends using computers and so forth. So in the GTI 200 and indeed in the premium version of the spreadsheet, we look at bullish and bearish trends. There are two kinds of bullish trends. The first one is leading, so it's already a good trend. It's already a ByteTrend score of 5, which means it's going up, and the 30-week CAPR has made a high. So that means that the CAPR is at the highest level that it has been at any point of the last 30 weeks. And emerging trends is the same thing, except it's not quite as strong. So the ByteTrend score is not 5, it's 3 or 4, and it's also made a 30-week CAPR high. On the bearish side, the same thing in reverse. The ByteTrend score is not a 0, so it's not quite in a bear trend, but it's not doing too well. It's made of the lowest. It's trading at the lowest point it has done in the last 30 weeks. And a bear trend, everything's going wrong. The score is 0, and it's making a low in CAPR terms. So I'll give you 4 examples, one from each category. Going up is Netflix. And please don't worry about the current state of affairs. These are just examples to explain the charts. And we've got a very clear 5 pattern there. And it's touching the max. The moving averages are pointing upwards, and it's trading above both of them. So it's a very clear, clean 5. So that's an example of a leading trend. an emerging trend. So actually it looks pretty terrible, doesn't it? But if you look closely, you'll see that it's starting to perk up. So it's touched the max for the first time in a while. It's gone through the moving average, and apparently that movement, it looks like it's going down, but actually it's flat or rising. I know that because that score is a 3, but that's still going down, and the price is still below that, having had a huge correction. I mean, that's a massive underperformance of the market, 75% or so, and it's now starting to perk up. So there's a good chance that that stock, ST Micro, will face a period of strength. Then we've got deteriorating stocks on the bear side, the weakening trend. PACCAR, US truck company, had done very well, 70 to 140. So that means in those 2 years, it had done twice as well as the world index. But now it's got a bit of a hangover and it's coming back. Below both moving averages, one moving average is positive, that one's negative, and touching the min line. So we've got a score of 1. And then the bear example that we've got here, LVMH, the luxury goods company selling highly priced products to ladies around the world and some gentlemen as well. And that has got a weak trend below both moving averages, both negatively sloping, and we're touching the red. So we've got a score of 0. And LVMH was doing well for a long time, but this thing, this concept picked it up quite a long time ago that LVMH had seen its best days. Now I'm going to hand you back to Rashpal, who's going to tell you what's in the premium spreadsheet.
Absolutely. Thank you, Charlie. So in this spreadsheet which you provide, we do a ranking of over 2,000 stocks, and what we've shown over here is the 20 largest stocks. So the stocks are actually ranked by market cap, right? So running from the left, when you open this spreadsheet, what you're going to see? First of all, you're going to see the stock ticker, right? Followed next to it, exactly, is the currency of the stock. You can see the large number of dollar-denominated stocks, but there are others there, including South African rand and Taiwanese dollar. We have the stock name itself. Currently, we're giving the full name, so it's easy to identify. Then those are the key stock identifiers. So next to it are the metrics that we use to classify the different trend types, which Charlie's already explained. So we have the stock score, the CAPR score itself, which ranks between 0 and 5. 5 is very strong. And weak, or basically red is, 0 is bearish, which is also color-coded red, which means very weak, right? Next to it, we then show the percent deviation from the 30-week CAPR high, right? So if it's at 0, that basically means the stock is at an all-time high in terms of CAPR. It's outperforming the world index. Next to it is the metric which is used to define the bearish trend, which is if the stock's at a CAPR low, then we know it's in a bear trend effectively, or weakening. Those are the trend classification metrics. Next to it, then we basically have the volatility characteristics of the stocks. We have seen the differentiation in terms of the performance of stocks defined in terms of high, medium, and low volatility. So it pays to differentiate the stock volatility characteristics, right? You will notice that there's some color coding on that column. So the very large values are color coded in blue or in red. So it depends on the metric we're looking at, right? It makes it easier to identify very large and very small values. Next to that, we have the size of the stock, which is labeled MCAP, which is market cap, and it's in billions, and it's all in the same currency, which is dollars. So it's easy to compare, right? The sectors are color-coded in different colors, and the colorings are all the same for each sector, right? So technology currently is in purple, consumer cyclicals is in red. So it makes it easy to identify common patterns effectively. And we've also broken the sectors further into industries. So we feel these are the most important characteristics that will help you get towards the answer, but there are additional parameters in the stock spreadsheet itself. Now, when we analyze the stock, so we explain the concept of the scoring system that we do, we also derive insights using the scorings that we have basically computed, right? So what we're looking at over here is the average stock scores over time to understand different market dynamics. So what we define as breadth is basically looking at how many stocks and the different trend categories. So we have color-coded these categories to make it easy to understand with psychological colors, right? So the very bearish categories are stocks which fall between a score of 0 and 1. So you can see how that picked up from around April 2025 during the market correction, right? The blue color are the strongest trending stocks. So most of the time in a bull market, you'll see a lot more blue effectively. And when there's a correction, you'll see a reduction in the blue. And the other colors are the trend scores in between. So basically between 1 and all the way to a 4 effectively, right? Now, we're doing the same at the sector level and the region level. So what we've done over here is showing you the average score of the stocks by sector and by region. The regions are shown in the column, the sectors are shown in the rows. The color, there's also a color coding to make it easy to differentiate the very strong from the very weak. Like we said, the very strong is in dark blue and the very weak is in dark red. You will notice that real estate in America stands out as a very weak sector, right? So the stocks in that sector are very weak at the moment. You'll also notice a very interesting story in terms of European financial services and also European utilities, right? So there's lots of scope and opportunity in that area. Nonetheless, this whole matrix itself tells a picture on its own in terms of strength and weakness across sectors and by regions. If we go, we also have another slide which summarizes all of this in one picture, right? Starting on the left, we have the average stock ranking across the regions, right? So the blue basically means it's above, the score is above the average, it's 2.8. The reds basically means it's below the average. So currently Europe is very strong and Asia Pacific and Americas are weak or weaker. At the top right-hand side, we've broken down the regions in terms of countries. And again, the color coding is the same. Blue means above average score, and red means below average. So you'll notice that countries like Spain, Italy, Mexico stand out as the strongest in terms of the average trend score of the stocks in those countries, right? And we look at countries like Indonesia, Malaysia, and Thailand in Asia, which are actually very weak at the moment. Beneath that is the sectors which we already alluded to earlier. So you can see financial services, utilities, and industrials are the strongest sectors, which we've written about in the last couple of pieces. And at the bottom, you can see real estate, consumer cyclicals, and healthcare. So those are the weak sectors at the moment.
Brilliant. Well, thank you both very much for the run through. We've covered CAPR and how it's a better way to look at a stock chart. We've also shared the methodology behind our trend scoring system, which makes it faster and easier to pick out trends in a large list of stocks. And we've laid out how the global trend services, both the top 200 and the premium, are laid out to be high on detail, but very quick and easy to use as well. Now that's the presentation concluded, and it's time to move on to Q&A. So firstly, thanks for watching and listening so far. If you have any questions, hit the Q&A button, ask us a question, and we will run through them. We've got one in there already, but we'd love some more. And we've had a few come in ahead of time as well. So I'll start just with two of those and then move on to the live Q&A. So firstly, Charlie, what should we do with the information that's thrown out in the GTI Premium service? Is every emerging trend a buy? Is every bearish trend a sell? How should we use this information to translate that into decisions of what to do with investments?
Well, the answer, Kit, is very carefully. And that's how you use all financial information. If I gave you a list of low PE stocks, would you buy them all? If I gave you a list of high growth stocks, would you buy them all? I hope you wouldn't. I would hope you'd add this to the other list of things you do to identify good stocks. Really, what we're doing here is opening the bonnet of what we do at ByteTree. I've been looking at reports like this for 20 years. In fact, 2001 was the first time that I came up with one of these. And it came, the idea came from Robin Griffiths, who's on the AAA report. I was quite close to him back in the day, and took his work a little stage further and got to the stock level and launched the trend fund. And indeed, if you buy all the stocks like the emerging trends or the leading trends, you will academically, theoretically outperform. There's a huge amount of turnover involved. What we're doing here at ByteTree is using this useful information to come up with some ideas. And you'll start to see those more formally linked. So, I've been using this kind of information for a long time, but we're now to be, there's going to be a much clearer link between things that are happening on GTI and things that are happening elsewhere at ByteTree. I think that's really the important point. But yeah, I mean, the best ideas in the world will all come through the leading and the emerging lists. They can't not. It's by definition. You can't be a stock that goes up 100 times over the next 10 years without going through those lists. You have to go through those lists. So think of it that way. If you wanted to pick a fantasy football team and you said, okay, well, in my football team, I'm only going to pick people who manage to score 10 goals. You're going to do much better in your team than if you pick footballers who have got a sore knee. You know what I mean? So it's sort of, in some ways, an incredibly simple idea. You're looking for winners, scanning for the winners, staying on top of it, being better informed about the market. Right now, we know there's a problem in US real estate. Well, think about that and the implications of that. And we know that European financials, utilities, and industrials are doing pretty well. So that's where to go hunting. Should you buy something because it's made a relative high? Probably not.
Perfect. Thank you, Charlie. And then Rashpal, one for you was just on the organization within the spreadsheet and how people can use or adapt or manipulate that data best to their advantage. Have you got anything that you could share on that front?
Absolutely. My answer relates to what Charlie was saying earlier. The way I see the spreadsheet, it's a tool effectively, right? It's a tool created to help drive you towards the answer. Now, a lot of our investors will basically be, readers will be owning stocks in their portfolios, in their pension investments. And so the way to use the spreadsheet, first of all, to identify, we're helping you filter through the list of stocks, right? There are over 2,000 stocks, but not all of them matter. We start off by differentiating the different 10 categories, right? So like we said, we have emerging trends, we have bearish trends, we have leading trends, and we have weakening trends. So imagine you're holding a stock. You clearly want to go and see which category does it fall into, Is it in the right category? It might be in the bearish category, which is already part of the answer, right? Secondly, when you open that spreadsheet, we start off just by showing you the most critical information, which I talked about earlier, right? The stock characteristics, the metrics used to define the trend type, and a few other information, the size of the stock and the volatility, right? However, you will notice that if you expand the columns, there's a plus sign in the spreadsheet. You can expand it and see a lot more information. So there are times when the market is not doing very well. So in terms of a bullish mode, it tends to switch towards a bearish mode. In that kind of scenario, low volatility stocks typically outperform, and it's a theme we've seen play out earlier this year. So in that kind of scenario, supposing you want to drill through specifically not just the leading trends, but the leading trends which are low volatility, this spreadsheet allows you to do that. It has a column which specifically defines the volatility of the stocks, but it also defines the volatility category. So we've converted the volatility score to volatility category. And what you can do is you can just go and pick up the low volatility stocks. And supposing you also want them to be large cap stocks, you can now go and define, for example, a certain threshold above which you look at the market cap. So the bottom line is each of the columns has a filter, and you can filter by that and define exactly the kind of stocks you're looking for. It helps drive you towards the answer. So it's effectively a tool.
Perfect. Rashpal, thank you so much for running us through that. All right, now we've had a few questions come in, so I'll go to those. Firstly, Charlie, back to you. Is it possible to see trend scores for companies that are outside of the stock universe? I guess this isn't, can we do this at home ourselves question.
So we've got 2,500 stocks, and that includes the FTSE 350. So basically, we've got virtually every liquid stock in the world. If there's something we haven't got, tell us, we'll add it. Yeah, not a big deal. But we started this a few weeks ago, and to my mind, it's going to be at least 5 times better this time next year. So keep feeding back what's going on. But yeah, your stock should be there. Does it look at microcaps? No, there's no point. I mean, I don't think technical analysis really serves microcaps particularly well. And of course, there are thousands and thousands of those around the world. Really, technical analysis is at its forte when the underlying instruments are liquid. Yeah, so really good on big liquid stuff, less useful, apart from the pass go thesis. You've got some mining stock that suddenly starts going up. Okay, fine, quite useful information. But really, I think that in terms of trends, it's a liquid stock universe. Can you do it at home? Well, I think we want to be able to do more things and give access to these charts. So we are looking at ways of doing that through various web services. So that'll be part of the improvement I talked about. There's lots going to happen here. Really, I think the vision is that this is, the sort of public centerpiece of ByteTree. We're on it. We know what the hell's going on in the world. Most people don't. We do, and we're sharing that with our clients. And we've got to up our game and stay on top of everything. So that's really where we are. I just think that ByteTree stands for excellence, and this is part of it.
Fantastic, perfect answer, and a very quick follow-up, and I think I know what you'll say, but someone is asking also about commodities. Would the CAPR and scoring system apply to those in the same way? And is that something that may come along in the future?
Well, we've got it already. I mean, ByteTrend CAPR, or not CAPR, but ByteTrend rather, actually, and CAPR, has been on ByteTrend.io for the last 2 years. Yeah, and we've got those commodity ETFs from WisdomTree. So if you go to ByteTrend.io and press commodities, there you go. Hey presto.
Perfect. Thank you very much. Now, Rashpal, there's a question about how the global trend services, the free, the top 200, and the premium service, how do those fit alongside the brilliant work you're already doing in the adaptive asset allocation report with Robin Griffiths?
So actually, the adaptive asset allocation report evolved from the work we used to do on the institutional side. Even the asset classes that we picked were the ones that are very liquid and very investable for fund managers and their kind of clients, right? As we move along, we want to tie the two together, and we've talked to Charlie about that. We've talked with Charlie about that. So there will be more of an evolution going forward, and we'll try and basically marry up the stock ideas with the macro themes that are coming out of AAA. So it's not very transparent at the moment, but it will become more transparent as we keep building on this GTI product and trying and with the aim of marrying up the two products over time.
Indeed. Perfect. And Charlie, maybe you spoke on this a little bit already, but how GTI fits into the whole ByteTree universe. You've got the multi-asset investor with venture on top of it. There's the AAA, the crypto research. How is GTI fitting into that network for you?
Well, it makes damn sure we have to get up very early on a Monday morning, doesn't it, Kit?
Yeah.
Rather than cruise in, we're up and on it to get this report out in time. And Rashpal's crunched the data over the weekend, for the close on Friday. So that's 9 p.m. US close. And there's no other time we could do it but over the weekend, which is annoying. But I just think it's so important. And when big things happen, we'll know about it quite quickly because we do this every single Monday. And how's it all going to fit together? Well, hopefully it'll become more obvious in time. We'll start talking about it. And I think that the whole sort of ByteTrend concept, I've sort of sheltered it from the multi-asset investor because I know that a lot of readers have no idea what you're talking about. Whereas in venture, I've been more open about it because you've got more advanced investors, that kind of thing. And I think that now we've kicked off with GTI, we write this every week. And so the gloves are off. We'll talk about this a lot and refer to this system. I think one of the fears has been that, something's a 5, and of course it can be a 5 for 5 minutes and then not be a 5. I mean, that's just markets and trend following for you. So there is a sort of fear that, people are going to write in incessantly when, something drops to a 0. As, a couple of our holdings are zeros. But if you like them, don't worry about it. It just means that they're not working this week, and there's always next week. But constantly, if we keep searching for new things and rejecting things that are going wrong, and replacing them with things that are going right, and just keep repeating that process with fundamental investing and analysis alongside, we're going to continue to have the great results we've had, and I think we're just sharing it more openly than we were in the past.
Perfect. Thanks, Charlie. And someone has asked, will there be a recording of this presentation? I can take that one. Yes, there will. That'll be available shortly afterwards. And going back, there was a really good question, actually. So, Rashpal, you were talking about volatility and how that worked as a category. And someone's asked a few questions around that theme. So, what role does volatility play in strong momentum stocks? Do changes in volatility give you any indication as to increasing risk? For example, if volatility were to pick up in one of the leading trends, should you be getting cautious? Over to you.
So the different ways you can use volatility. If you look at traditional CTAs, so trend followers, right? They tend to follow stocks regardless of the volatility. So if you're I'd say at the core, a true trend follower, you don't differentiate in terms of volatility because many times what you need is the volatility. You've got to be able to live with it. Some stocks are just volatile and you've got to be able to ride the correction in order to enjoy the longer term trend, right? The other people who can't digest the volatility. So you tend to put guardrails around your trend ranking system effectively. So if you find that you're the kind of investor who doesn't basically cannot stomach volatility, let's say you don't have the appetite for it, then what you can do is you can apply your trend ranking on a reduced universe of low volatility in stocks, in which case it still works, but typically what's going to happen is that your returns should be lower, at least according to theoretical and classical finance, right? It doesn't always play out like that because if you're in a bearish kind of environment, then you might find, for example, the low volatility stocks actually outperform. And that is actually one of Warren Buffett's mantras. Warren Buffett basically buys low vol stocks, with a sound fundamental idea behind it. So I think it's the case of horses for courses. Depends on what you like and whether if you can live with the volatility. Over the long term, we still do like to ride out the volatility because we've seen that if you tend to put too many rules when it comes to trend classification, then it kind of breaks the ethos of trend following. I know that answers the question. Charlie, you want to add something else?
Yeah, I do. Now, Kit, I want you to remind me to put something next Monday. We'll do the high vol, low vol chart, which I think we meant to do a couple of weeks ago, but we never did it. It's a good, the relationship between high vol and low vol stocks. I mean, low vol stocks are your boring stocks like Unilever, and high vol stocks, often make no money, or they've got a concept, or they're very, very cyclical or something. And the high vol stocks are, they're quite fun to observe in stock markets. I mean, if you put all your money into high vol stocks, then I think you would die younger than you otherwise would if you invested in low vol stocks. and ironically, you don't get paid for the volatility long term. Theoretically, low vol stocks long term outperform high vol stocks. But by God, high vol are great to trade, and they're also a very useful signal. So when high vol's done too well, like in 2021, that was a market bubble signal. So there's lots of information to be garnered from these different relationships, and definitely the market's pro low vol at the moment, although not as much as it was a month ago. So that's easing back a bit.
Yeah. And in fact, I just want to add one more point, Kit, if you don't mind, right? If you look at the performance of the CTA universe, so these are the classical trend followers, you will notice that since 2008, many of them have not actually performed very well. If you look at the AAA strategy, it's a very simple strategy applied in a simple universe, and the rules are actually very simple. So the question is, why has the AAA product performed? And a lot of these quant funds and these trend funds who have, mega brains, they have hundreds and armies of PhDs, are underperforming. And the reason is actually very simple. Their rules are too complex. They have too many constraints. Because of MiFID, because of regulation, you cannot hold more than X%. The volatility cannot be more than Y%. So in the end, when you put all these constraints, your universe becomes smaller and smaller, and the trends you're actually defining are not the best trends, right? So sometimes, coming back to the rule about volatility, you just have to be able to ride it out. But we understand not everyone can do that. And sometimes simplicity is just the best answer, Occam's razor.
Yeah, and of course it's easy to ride out volatility when you know that the underlying thing you own is good. Yeah, if it's a bar of gold, that's a good thing to own long term. If it's the S&P 500, whatever, that's a good thing to own long term. Whereas if it's something that's a bit flaky and speculative, then you haven't quite got the same conviction. And the volatility, perhaps you shouldn't be so embracing of it.
Perfect. Thank you both. Well, there's a couple more that I can take on. Firstly, do we have any plans to introduce a service for income-seeking investors? Not currently, but watch this space as far as I know. And someone's asking about the different moving averages and what's the best way to interpret their meaning, I guess. And I think our answer would probably be that this is the best way. This is what we're proposing, is that moving averages form a part of the scoring system that we're doing. But Charlie has raised his hand and would like to add to that.
Yeah, it's a favourite question. My favourite question in the UK Society of Technical Analysts, which Rashbad has attended on occasion, as well as myself. The old joke is the amateurs always say, "What's your favourite moving average?" as a question, as if there's a single answer. Now, a high vol stock would be much shorter term moving averages than a low vol. So if you're really clever, then you might adjust your moving averages for that. But going back to what Rashbal said, keep it simple. And just be flexible. I don't really care if our moving averages were changed from 200 weeks to 150 and 30 was changed for 20 or 40. It wouldn't make a lot of difference, provided we were consistently applying that process. That's more important. It's more important to get out of bed on Monday morning and to do the analysis and jot it down and take your conclusions rather than obsess about which moving average you should use. And of course, with hindsight, you can always optimize and backtest these things. But they're always going to give you the wrong answer. So 30 and 200, pretty standard things to do. 30 days, 200 days, or 30 weeks, 200 weeks. Either works. I think that what I would say is that we're doing a weekly report here. I think one of the things that a weekly report with weekly data. Yeah. And what we've done in ByteTrend.io is daily data with exactly the same process. Exactly the same numbers, 30 and 200 day, 20-day max min, all that. But using the data, and I think that it's people haven't liked it so much because There's just too much going on. I mean, trends change all the time. Yeah. But that's not really the point. The point is to identify leadership and ask the question, is that the next best thing that's going to go, that's going to continue to outperform for a while? And if you ask the questions, and then sometimes that can be really, really helpful. And CAPR is beating the market. Beating the market on the way down means you're defensive. Beating the market on the way up means you're a bit growthier and that sort of thing. So they can mean different things at different times. And the short term and the medium and the long, well, our weekly report is, I'd probably call that medium term rather than long term. But 30-day, 200-day is probably short term. And anything inside that is just crazy day trading. But yeah, so I think this is deliberately a slow report. We're trying to get the asset allocation right. We want to, it's telling us to be overweight Europe right now, more so than anything else. It's telling us where to be worried right now. US real estate stands out, big red box, problem here. What does that mean? Go and ask the questions, and that's why we do this. And yes, every now and then we'll stumble upon some amazing stock.
Perfect. I think someone's asked the question whether it's possible from our source data to add a suitable value measure 1 to 5 to each row in the raw data. And I think that's asking, are we going to incorporate fundamentals in this? And I think that's your point, which is this is giving the trend data, then go away and analyze the fundamentals separately. But what I wanted to ask you about, Charlie, just on those moving averages, is the scoring system as a group of 5. How did that originally come about? How did you decide on those 5 metrics? And is that something that is used elsewhere?
No, it's mine. It's original. It actually came about for hedging. It came about when I was at Atlantic House, and we had a long only fund with a hedge overlay, and it was developed to come up with this idea of how much hedge you put on top. And it was the unbiased nature, because you can sit there on an investment committee with a bunch of people talking nonsense for an hour, yeah, and you just want a number. Just give me a number. So 0 means it's going down, 5 means it's going up. The 0 doesn't mean it's going down for the next 10 years or 10 minutes. It doesn't really. That's a dog. That's a dog. Not helpful. Would you shut up? Sorry about that, ladies and gentlemen. But you're going to have this signal, and it's going to carry on for 10 minutes or for ages. You don't know. But the point is, you've got the signal, yeah, and you can work with that, and it's a statement of fact, and you can throw it at a computer, and you can interpret it, and you can watch the changes and all these sorts of things, and it's completely unbiased. So I stress, the 20-day, does it matter if it's 18? Not really, or 22, doesn't matter. No, the moving average specifically doesn't matter, but the concepts of moving average, gradient, and a bubble below. Gradient takes time to turn. Bubble low happens in a second. Yeah, max min happens in a second. Moving averages take time. So you're blending fast things with slow things. Yeah, and that's the real point here. So I think ByteTrend's a great concept in a world of too many stocks, lots of data. It's almost a language. You could say, how's Microsoft doing? It's a 5. And you know what that means. If I show you a chart of Microsoft, you could be there for 10 minutes explaining what the chart's doing, talking nonsense, or you could just say it's a 5.
Perfect. Well, I think that's actually a really great note to end it on. Microsoft is the only 5 of the Magnificent 7, as we've been noting in recent weeks, delivered in a single sentence, not an hour-long webinar on its own right. So thanks everyone who sent in the questions. Thanks Charlie and Rashpal for answering them so well. To summarize everything we've gone over today a little bit, Global Trends Investor is going to offer a detailed but concise weekly report to keep investors up to date on the most significant trends in the stock market. It's going to help raise awareness of trends, enforce investment discipline, and generate new ideas as well. And remember, not every score of 5 is a great stock, but every great stock will spend a lot of time scoring 5. To find out more, I'd encourage you to go and visit our site, globaltrends.bytetree.com. That's where you're going to find all of this and the adaptive asset allocation report that we've talked about as well that Rashpal runs with Robin. I'd like to say a big thank you to Charlie and Rashpal for sharing everything with us today, and an even big one to everyone who's signed up to watch this, logged on in the middle of your afternoons, paid attention, asked good questions. Thank you very much indeed. Hope you enjoyed it. Hope you found it valuable. And we are very excited to send you the next issues of GTI Top 200 and GTI Premium next Monday, first thing.